Sentiment was certainly very weak in global financial markets last night. We've seen shares come off 1 to 2% for the major indices in the Northern Hemisphere. And in this environment of risk aversion, the New Zealand dollar's come under pressure as well. And we're trading around 80.5 cents against the US dollar, having traded around 82 cents only a day earlier. Now, the driver of this poor sentiment is, again, concerns about sovereign debt developments in Europe and concerns about growth in America. So what's new on that front? Well, in the States, we just had more weak data out. A regional Fed survey was very weak, where the National Association of Home Builders, their index was out, and that's again very weak. No surprises there. The construction industry in the States looks very poor at the moment, and we expect it will for a while. But nonetheless, those surveys weren't encouraging at all for financial markets. And across in Europe, well, the debt concerns about Greece in particular just continue. And there they've got political instability, and it seems just a matter of if rather than when there's some sort of restructure on the Greek debt these days. Also, some concerns about the Irish banking developments, and perhaps a need for further restructuring or alteration to the plans there. So all those things added up to a very weak night in share markets. Now for us, the data yesterday wasn't too bad. We had a retail sales report, and this was for the first quarter. What it showed was that volumes were up 0.9% compared to the prior quarter, so an encouraging lift in sales volumes. The real spot of weakness was in Canterbury, and that's understandable given what's happened down there. If we look at a regional basis, that was the only region to experience a decline in activity. And hopefully even there we'll see things recovering over the year ahead as activity returns to some sort of normality there. But for now, quite a contraction in that region. We also had Roy Morgan consumer confidence out yesterday. Now this consumer confidence took quite a hit in the wake of the earthquake, and it's pleasing to see this monthly survey has shown signs of improvements as life returns to some sort of normality following those shocking events back earlier in the year. Now for the farmers, if they're not down at the field days, they may have been keeping an eye on the global dairy trade auction last night. Now prices did slip there on a trade-weighted basis, down 2.6%. But when we look at the actual level that prices are trading at, they're still very encouraging, and very high prices we think are still being achieved for Fonterra's auction, despite the dip that we saw last night. But for our commodities, dairy in particular, prices are hanging in there pretty well.